Hey, it's Mark Yagi, and I want to get right to it. We are in a red market, which means it's probably not the best time to buy. So I want you to kind of get ready for this next stock that I'm going to talk about because I think it's ready to break out. Now, let's take a look at it. This is Apple. You might have heard of Apple, and it's one of the best performing stocks of all time. But it's what's interesting, that Apple hasn't really done much in the last couple of years. It's just kind of gone back and forth in this little range. In fact, since I'm going to go with like May of 2023 until now, and we're in June of 2024, it's been in this range. So if you look at this chart, you can see it's been in this consolidation range for pretty much a year. It's about 45 weeks, but it's almost a year. And now you know my rule. My rule is as the longer a stock stays in a range, the longer it coils the spring. When a spring gets coiled longer and longer, when it breaks out, a big breakout is coming. Now, if you look at the fundamentals of Apple, it doesn't grow very quickly. I mean, it's growing, but it isn't growing that fast. Sales are kind of not growing very much. EPS, earnings per share, is not growing that much. But the stock has been, building fundamentals while the stock price has been staying the same. So if you take a look here, and this is the weekly chart, you can see that the top end of the weekly chart is right around 199. So there's a couple things happening here. So if you look at this chart, you can see there's a tight pattern here. A tight pattern is when a stock doesn't move more than 1 or 2% over a weekly period of time for several weeks in a row. And we've got about 3 weeks in a row that this has been tight. You can see the stock is at 194.50. Okay, so that's one thing. You can also see that on low volume, which I don't love, but we are in a red market, we've got this stock increasing in price every week. 4 weeks in a row, it's been increasing in price. And in fact, if 5 out of the last 6 weeks it's increased in price, and we had a big bounce over the 200-day and the 50-day moving average in the same week right here on high volume. A lot of good stuff going on here. Relative strength rating, not as high as I'd like to see it, but it is building. And all of this stuff that's going on in here is showing that there's cause for this to go higher. Another thing that's good on this chart, and I'll show you on the next one, is this golden cross is about to happen. And the last thing is the top of the consolidation is around 199 and change. And when stocks get to that even number, for some reason in research over the last 130 years, when they get to even numbers, $100, $200, $400, they seem to bounce into that and then break through it. And this is the third time it'll bounce through that, or bounce into that. Now, the question is, will it have enough volume to break through it? That's why I'm putting you on alert that you should add this to your watch list, because if it does break through it, it's going to break through it because that spring is coiled, and it's going to go probably a lot higher. I think we got 220 easy in this. That's a 10% gain from here. And if you get an easy 10% gain on volume, you're probably going to get 20. So I'd say 240, 250 is where this stock wants to go on a breakout. Now, don't take my word for it. Do your homework. This is just education and information, but I'm alerting you to it. Let me just do one quickie here. I'll put it on a daily. You can see that we had a big gap up right in there. That's a lot of power, and we did it on a lot of volume, right? You can see the volume was 163 million versus a normal volume of what, 60 million, 55 million, something like that. And you can see this stock went above the 200 and the 50 on the same day, and it stayed above that for the last 3-4 weeks. That's all really good stuff. And coming into this 199.62 level, that's where you got to watch it. So if you want an early entry, now's the time. Maybe you nibble away at it. The market is red, so I don't love buying stuff in a down market. But if you'd like to nibble away at things and kind of get your position started, this might be a good time to start taking a look at it. Red markets always end and green markets always begin at some point, and we might be rotating out of that. And you're seeing Apple kind of wanting to lead the market a little bit, and it's been lagging the market for several months. So you could sell covered calls against this. You can do just a breakout trade against this, but I wanted to at least put it on your radar so you can have it on your watch list. Thanks for joining me, and I'll see you on the next video. Take care.